Hey everyone, today we are going to talk about two interesting companies that seem to have good potential ahead based on their recent filing. The first one is a real estate developer which is acquiring a 60% stake in WorldNext Realty for Rs 30 crore, which gives it access to new land parcels, development rights and housing projects. And the second one is a TravelTech player, and it has tied up with Profitroom to expand hotel distribution across the Middle East and Africa. So basically, both companies are expanding steadily, one by deepening its presence in real estate and the other by scaling hotel tech reach in fast-growing regions. Welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always be in the spotlight but have strong potential for the future. I'm Nishant, Equity Research Analyst at Desvelado Advisory, and today we are going to talk about two interesting companies that are making solid progress in their business, and if current trends continue, they might keep growing even further. But before we begin, here's a quick disclaimer. Any discussion, facts or writing provided are for information purposes only and do not constitute a buy or sell recommendation. Please conduct your own due diligence before making any investment decision. So let's start with the first company that we are covering today, AGI Infra Ltd, which operates in the real estate and construction services space. The company is acquiring a 60% stake in WorldNext Realty LLP for Rs 30 crore, giving it majority control in a firm engaged in group housing and other real estate development projects. This acquisition is quite strategic as it provides AGI access to new land parcel development rights and fresh project opportunities, strengthening its pipeline. On the top of that, the company can leverage its in-house execution capabilities, construction infrastructure, and project management expertise to deliver efficiently and generate operational synergy. All of these is expected to boost revenue visibility, diversify the portfolio, and enhance long-term growth for the company, positioning AGI for more strongly in both residential and commercial markets. Now, Saizal will be joining in for more. So, Saizal, how do you see this extension reflecting in AGI Infra's financial performance so far?
Thanks, Nishant. Now, if we look at the AGI's financial performance, it has been quite steady and encouraging. For FY25, company's revenue grew 11.1% year on year to 324.8 crores, despite some of the quarterly ups and downs. And after a strong Q3 performance of 91.4 crores, company's revenue dipped in Q4, but then it quickly rebounded in Q1 FY26 with 91.6 crores, up by 10.1% quarter on quarter, showing that the growth momentum is intact. And if I talk about profitability, though, this is where AGI really shines because its EBITDA also rose to 104.9 crores, with margins improving to 32.3% from 28.9%, and the net profit jumped 28% year on year to 66.6 crores, with PAT margins close to 20%. And even in Q1 FY26, company delivered robust 35.2% EBITDA margin, 21.4% PAT margin, which very few real estate players they manage consistently. But Nishant, beyond the numbers, how is AGI Infra preparing itself for the next big phase of growth?
Yeah, I think that's a great question. The company has already lined up 4 projects under approval with a cumulative 98 lakh square feet sellable area spread across New Chandigarh, Ludhiana, and Jalandhar. Two of the most significant ones are PIA Utopia 25 lakh square feet and AGI Gateway 40 lakh square feet, both of which are large scale developments planned for phased completion over the next 5 years. These projects will not only expand AGI's presence in high-demand urban hubs, but also ensure steady revenue visibility and stronger realization over the medium term. What's equally important is AGI's push into new growth markets like Chandigarh, which reduces its dependence on Jalandhar and diversifies geographic risk. By tapping into these emerging demand centers, the company can achieve better pricing power, improve resilience, and create a stronger growth runway. So, my question to you, Saidal, is that with these project expansions and strong financial discipline, where do you think AGI Infra stands in terms of its overall positioning within the reality sector?
See, Nishant, in my view, AGI Infra is positioning itself as a resilient and high quality player in the real estate sector. Unlike many peers who face margin pressure, AGI has consistently delivered over 30% EBITDA margin and nearly 20% PAT margin as well, which makes it stand out. Now, combine this with strong upcoming project pipeline, entering into high demand region, and now the WorldNext Realty acquisition, company has both scale and execution strength needed to sustain the growth. And over the next few years, these strategic moves will likely give AGI a stronger competitive edge, better revenue visibility, and long-term shareholder value creation as well. And if execution stays on track, AGI could emerge as one of the most margin assertive and dependable growth stories in India's real estate space.
Yeah, totally agree with you, Cecil. So now let's move to our second company that we are covering today, RateGain Travel Technologies Limited, which is the leading distribution technology provider globally and also the largest SaaS company in India's travel and hospitality sector. The firm caters to multiple verticals, including hotels, airlines, OTAs, cruise lines, and even ferries, essentially covering the entire travel value chain. Recently, RateGain announced a strategic partnership with Profitroom to expand hotel distribution across the Middle East and Africa, two regions witnessing rapid digital adoption and booming travel demand. By combining Profitroom's booking and CRM tools with RateGain's AI-driven channel manager, hotels will now get real-time access to 400 plus demand partners, ensuring accurate pricing, reduced overbookings, and seamless availability. This move not only strengthens hotel profitability but also support RateGain's FY26 guidance of 6 to 8% revenue growth with 15 to 70% margins underpinned by a strong pipeline and deal wins. So, my question to you, Cyril, is how do you see this partnership reflecting RateGain's overall financial performance so far?
That's a very important point, Nishan. Financially, RateGain has a robust FY25 with revenue climbing 12.5% year on year to reaching 1076.6 crores if we compare this to 957 crores in FY24. Now, what stands out is the consistency. Except for a Q4 dip of 6.5% quarter on quarter, the momentum resumed in Q1 FY26 as well with 4.7% sequential growth, signaling sustained demand for its SaaS driven offerings. Now, on the profitability side, the company delivered EBITDA of 232 crores compared to 189.7 crores last year, with margins improving to 21.5% compared to 19.8%, which also showcased a strong operating leverage. Net profit grew even faster at 44% year on year to 208.9 crores, with PAT margin expanding to 18.1%. Now, even though Q1 FY26 saw a margin dip to 16%, the underlying strength is visible with Q3 and Q4 margins holding above 22%, showing scalability. But Nishan, beyond these numbers, how is RateGain preparing itself to capture the next phase of the growth globally?
Yeah, I think that's a great question. The company has set very ambitious goals, especially in APAC, where it aims to become the dominant player within the next 1 to 2 years. This is supported by a significant GDM headcount expansion from 15 to 55, with 55, which has already translated into 23.2% revenue growth and strong contract wins. At the same time, North America is also showing equally strong traction, creating dual growth engines across two of the world's largest travel markets. Looking ahead, the company is targeting double-digit organic growth over the next 2 years, with a longer-term aspiration of reaching 20% organic growth by leveraging product innovation, AI-driven automation, and wider distribution partnerships. This expansion this expansion strategy shows that RateGain is not just maintaining growth but actively scaling its leadership in high demand markets. So, my question to you, Cecil, is that given this strong positioning, how do you see RateGain's long term potential within the travel tech sector?
See, in my view, Nishant, RateGain is setting itself up as a clear global leader in the travel technology. Now, what differentiates it is the combination of consistent double digit top line growth, scalable SaaS profitability, and a strong global expansion strategy. Now, its ability to sustain 20% plus EBITDA margin and approx 18% PAT margins, it shows a durable competitive mode that few players in the industry can replicate. And with travel demand rebounding strongly in the emerging regions like Middle East, Africa, and continued scale up in the APAC and North America, the company is also building multiple growth levers for the next 3 to 5 years. And if execution remains on track, surely RateGain can truly become a margin assertive, high growth SaaS story that captures a dominant share of digital travel ecosystem worldwide.
Yeah, thanks a lot, Cecil. That really helped us understand the direction both these companies are moving in. All right, now let's take a look at how some of our previous picks have performed. So the first company, InfoBeans Technologies Limited, from 524.9 to 640.1, that's a 21.9% gain. Vintage Coffee and Beverages Limited, that we covered at rupees 149.9, is currently trading at rupees 147.7, that's a 1.4% decline. Mastek Limited, from rupees 2,547 to rupees 2,415, that's a nearly 5.2% decline. Suprajit Engineering Limited, from rupees 468.1 to rupees 453, that's around 3.2% decline. The next company, Vimta Labs Limited, from rupees 481.5, is currently trading at rupees 658, that's around 36.7% gain. So overall, a pretty good mix of gains, and we will continue to monitor all these companies closely to see how they shape up in the coming quarters. Now, here's the QR which you can scan to access all the previous picks that we have covered in our Noisemaker segment to get all the returns that we have generated for our viewers. Now, let's see the summary of today's recent filings, which include the first company that we covered today, AGI Infra Ltd. The company is set to acquire a 60% stake in WorldNext Realty LLP for rupees 30 crore through cash consideration. And the second company, RateGain Travel Technologies Limited. The company has entered a strategic partnership with Profitroom to expand hotel distribution in the Middle East and Africa. So that's it for today's edition of Noisemaker. If you found this breakdown informative, you can scan the QR to read the full report. We will be back soon with more simple and clear market updates. Until then, stay curious, stay informed, and stay ahead.